Hello, everyone. Today we're talking about something foundational, but it's often overlooked. And that's going to be entity selection for your ABA business, right? So whether you're just getting started or you've been in business for a while and you've got a mature business, your clinic is expanding, right? The structure that you choose is going to affect how you're taxed, how you pay yourself, and how much liability protection you ultimately have. So let's dive into this. Why does your entity structure matter? Like I just said, three big things. It's going to be your taxes, how your income is reported and taxed. It's going to be your pay, how you take money out of the business to pay yourself, and your liability, whether your personal assets are going to be protected or not. You know, a lot of business owners start with what's easiest, but as your business grows, the wrong setup can end up costing you thousands of dollars in taxes or just leaving you exposed legally. So let's dive into these different entities. The first one, and the most simple, basic one of all, is going to be our sole proprietorship, right? This is just you operating the business. There is no legal distinction between you and the business, which means you are personally liable for any debts or any lawsuits that come up. All of the profits from this business entity are going to be subject to self-employment taxes, which are roughly 15.63%. Call it 15%, right, for simplicity. Now, even though this is a simple business model and there's no legal distinction between you and the business, you still need to keep separate business and personal accounts, right? At the end of the year, you have to file a form that says what that business did. If all of the business activity is intermingled with your personal accounts, that's going to make it really hard to narrow down what was business related and what was personal, right? So let's move to the next entity structure. We've got the single member LLC. So a single member LLC gives you limited liability protection. That's what LLC stands for, limited liability company. And so it's going to protect your personal assets from the business in the event of any debts or lawsuits or anything like that. But for tax purposes, you're treated no different as if you were a sole proprietor. All of your income is going to be taxed at self-employment taxes in addition to your income taxes. So you'll get the liability protection, but again, we're paying self-employment taxes here. This is a great starting point for getting you that initial legal protection with minimal complexity. And quite honestly, if you're going to start any business, whether it's ABA or not, open that LLC. I do not recommend a sole proprietorship because the only difference between the sole proprietorship and the single member LLC is the legal protection that you're getting. Everything else stays the same. All right. So beyond the single member LLC, right, one person who owns that LLC, we have the multi-member LLC or a partnership. So this is where we've got two or more people who own the business, and by default, you guys are going to file a partnership tax return at the end of the year. This is called Form 1065. So all of the profits are going to pass through to the partners, and each of them will pay self-employment tax on their fair share. So in this structure, we've got some more flexibility, but we are also working with other folks. So you really want to have a solid operating agreement that's going to outline key details like ownership structure, profit splits, and ultimate decision-making authority, right? All of these things should be clearly defined in your operating agreement. Now let's move on to the next one, and one of the most common tax entities that we see, and that's the S Corporation, right? Or an LLC electing to be taxed as an S Corporation. So this is where a lot of ABA clinics ultimately end up once they start getting profitable and they've scaled the company a bit, right? So an S Corp allows you to pay yourself a reasonable W-2 salary and then take the remaining profits as distributions, which those distributions would not be subject to any self-employment taxes, okay? So this is the structure that oftentimes will save clinic owners a ton of money on taxes every single year. So let me just give you an example here. Let's say your clinic nets $200,000 of profit. As an LLC, that entire $200,000 of profit is taxed at the self-employment rate, which we've said was 15%, right? As an S corporation, let's say you still have that $200,000 of profit, but you paid yourself a salary of $100,000. You're gonna pay the self-employment. It's Social Security and Medicare taxes. That's what self-employment taxes are ultimately. But for the self-employed folks, you don't got a paycheck for that to be withheld from. That's how Uncle Sam gets it. So you'll pay your 15% on the $100,000 of salary that you collected, but that remaining $100,000 of profit is free of self-employment tax. So at 15%, you just saved yourself $15,000 in annual taxes. Now, do bear in mind, right? S Corps get a little bit more complicated. You need to run payroll. You need to maintain all of your separate accounts, just like any other structure. Books need to be clean. And the big thing is going to be your reasonable compensation. Okay, you can't pay yourself $10,000 a year, take $190,000 as distributions, and say that you are getting paid a reasonable compensation. Right? There's $190,000 that's not getting any type of FICA, Social Security, Medicare taxes on it. Right? That's going to have to be collected in some shape or another. So the IRS does crack down on reasonable compensation. They do look at it. It's very important that you are paying yourself a reasonable salary so that you're not penalized. The IRS can come back and say, hey, all of these profit distributions that you took, we are going to reclassify them as unpaid wages, which you now owe FICA, Medicare, and Social Security taxes on, and you need to pay that back, right? So please make sure that you are setting that up properly to protect yourself from any compliance issues. All right, and then the next entity structure, the last one I've got for you guys, less common for smaller ABA clinics, but it can certainly be useful in certain setups, and that's the C corporation, right? So the C corporation is different than the other entities, whereby you are still considered part of the company, right? A C corporation is a completely separate legal entity that pays its own taxes. So in all of the previous entity structures that we talked about, the income flows through to the owners, and then they pay taxes at the individual level on your Form 1040, right? C corporation is going to pay taxes at its own tax return, and that's going to be at a flat 21% corporate tax rate. Other thing to keep in mind, when you take distributions from an S corporation, you're also going to be taxed on that. Those distributions are considered a dividend and not a distribution, right? So you will pay taxes on those dividends that you take out of this business. Now, this can make sense in a couple of different growth strategies. If you're planning to create a management company or continue to reinvest heavily into the business, a C Corp could work out. But the majority of what I see is going to fall into those pass-through entities, and most likely an S corporation once you get to that size. All right, so your entity is not permanent, right? Your structure is not permanent. It should evolve as your business does. So there's a couple of milestones that you can use to say, hey, am I ready to review my entity structure? And that's if you're making over $100,000 in profit annually, if you are adding or plan to add new partners or members to the company, potentially if you're looking at opening new locations or clinics, or if you're thinking about selling or restructuring, right? All these things can impact the decisions that we make as far as how we structure the business. So if any of these milestones have hit for you, this could be a perfect time to set up a phone call with your CPA or CFO and talk and make sure the overall structure still fits your goals, right? And I mean, generally speaking, we should consider our entity structure probably on an annual basis, right? If our goals and objectives can change throughout the year, the best entity structure might change in relation to those goals changing, right? So it doesn't need to be a long drawn out exercise, but just once a year, hey, does this entity structure still fit what I'm looking for? What are the pros of it, and is that what I'm trying to accomplish here? Here's the bottom line. Sole proprietorships are simple but leave you personally liable. LLCs give you a little bit of protection, but you're going to pay some self-employment taxes, right? We're not optimizing our tax situation here if we're not if we're profitable consistently. S corporations are often the best balance for established clinics who are consistently producing profit, right? And every business, no matter the entity, needs to keep separate business accounts from their personal accounts, okay? Clean books, separate accounts, these are our North Star for good reporting and tax compliance. So if you're unsure whether or not your current entity structure is helping you or hurting you, schedule a 15-minute digital coffee with us. The link will be in the description. We'll help you look at your setup, your profits, and whether a different structure could save you money or help reduce your risk.